The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon, folks. I'm your guest host, Steve Rhodes, filling in for David White. David not able to join us today. He will be back on Friday, though, folks. And, the Power Trading Hour, isn't it really all about power? Now, when I think about power or powerful statements, what I really think about is I start with the Pledge of Allegiance. Now, think about this. The Pledge of Allegiance begins with the word I, right? I pledge allegiance. Now, it ends with the word all. Justice for all. So it starts with I, ends with all, right? Now that's really what America is absolutely all about. I, the individual, and all of us. And I want to really thank each of you for joining us here today. Now, when we understand how valuable each of us is, that's what I call really powerful. This is the Power Trading Hour, right, folks? But more importantly, when each of us understands how powerful all of us is, that's what I call a superpower. You're part of the superpower. You're part of the family at TFNN. We absolutely appreciate your presence here today. Right now, you've got the Dow off about 77 points, S&P down 9, Composite off 13 points, small caps off 4. It's been up, down, and all around. And we're going to take a look at the markets here now. Obviously, we're going to do that. You can watch us on Tiger TV. If you go to the homepage of TFNN.com, click on Tiger TV, you'll be able to take a look at our charts here live. Now, what I've got up on my screen is I've got the ES Mini, the 30-minute chart. You had the Fed, release its minutes today, the FOMC. Then you had Bernanke out on the stump taking questions. I have no idea what he actually said. I don't need to know what he said. All I have to do is take a look at the markets here. That's kind of interesting to see that pop up on my screen here. And so I don't really need to know what he said. I can tell you what he said based on what I see here in the markets. I'm sure that what he said is they stand ready to do whatever it is that they need to do to prop these markets up, because that's exactly what it is that we saw after the Fed minutes release. And what I'm talking about here is just take a look at that first 30-minute session. That 30-minute session I'm talking about is between 12:30 and 1 o'clock. And what you had out here, you had the market push down hard, push down with volume. Makes sense that the market right now is going down there to test that level. So pushes down with volume. What do I mean push down? I mean, during that half-hour session, folks, you traded as high as 1349.50. You also traded as low as 1338.75. Quite a decent move. Take a look at that's a wide-ranging bar candle, if you will. I don't say if you will as much as I used to, but I sure do say it right this moment. Now, what is that candle? That's one of your candles. That's an I and an all candle. That's one of our candles, folks. That is a hammer candle, and that is a heck of a hammer candle. Why do you want to understand hammer candles? Well, folks, that is really where you see the true fight between the bulls and the bears. It's an unusual-looking hammer candle, still qualifies as an absolute hammer candle out there. That means support. Right now, in the ES Mini, the S&P futures is down at 1338.75. What else do you have around 1338.75? Well, you've got the close going into Friday. That's very important. That high out there, 1338.50, actually closed at 1338.25, so we'll give it a quarter. That line right there, you want to be long the market when price is above that and short the market when price is below that area. But you got not just a hammer, we're talking the sledgehammer. If we go back even further, again on the 30-minute chart, and we take a look at other areas of support out here, we're going to see a fairly large one right out here during the time frame of about 10:30 it is. I believe it's 10:30 on May the 9th. The low out there, 1339. We're at 1341. Our sledgehammer is right at also at that price level. So there's quite a bit of support there. And I'm thinking that Mr. Bernanke out there, what he said was not only are they going to go ahead and extend Operation Twist, but we all really knew that. What he's also going to do is they're standing in there. They've got bullets that they're willing to fire if they need to. At least that's what the charts are telling me right now. That is on the ES Mini. Let's go take a look at what was going on inside the currency marketplace. You talk about some swings out there. Now, you take a look at the U.S. dollar, Japanese yen. That is, the yen is getting weaker here on this chart. We're taking a look at it. The dollar actually getting stronger. Now, that's helping to offset what's going on in the dollar. You got the dollar index up 17 ticks right now. If you go take a look at so the yen acting very weak. And this is after making an A to B equals CD down. In fact, the yen on the daily chart made a Gartley buy pattern as it got into the 77 area. What does that really set up if you're taking a look at weakness in the yen? What it's going to set up, it's going to set up sweet 618. Sweet 618, folks, I'm talking about the retracement on the way back up. Where would that take you to? Let me go ahead and get rid of this one right here. That would take you to 8160 range. And right now what it's done, it's setting up the A to the B equals CD up. If we take a look at that, you go down to the low on June 1st, down at the 7765 area, up to the highs put in on June the 7th, pull all the way back into a couple trading sessions ago. That was on Friday, June 15th, as it made a low of 7863. The A to B, the 1-to-1, it would take you up to the 8078, but it wants to do more than a 1-to-1. It wants to get into that 8160-ish range, 8130 range. That is on the yen. Excuse me. If we go take a look at the euro here, moving down and moving down. Let's see here. So let's just try to go back to the time frame here. I got the 30-minute chart. So the 30-minute chart. Let me refresh this screen. Make sure I've got everything current here. So if we take a look at the euro in that 12 to 12:30 time frame, there we go. Take a look at that spike with inside the euro. It's why you want to be able to use stops for sure if you are trading currency pairs. The euro going from a high of 126,986 all the way down to a low, folks, of 126,367. Just got to wipe my glasses off. Right now, what is the euro doing? Really just trading right now. If you take a look at ever since about 11 o'clock on June 19th, truly just in a sideways trading action. This thing has, and take a look at where it actually traded to. Really take a look at wide price spread here. You would go from the low of the bar from 1 p.m. all the way up to the high of the bar at 1:30. That is some wide price spread out inside the euro. If we go take a look at the dollar index, King dollar right now trading out at 81.74. If we had Mr. Bud Rolfs on the phone with us or inside the den, maybe he is inside the den, what he would probably draw is he would draw the U.S. dollar index and show you this little downtrend channel that the U.S. dollar index has been traveling in ever since it made that 1.272 butterfly sell pattern out there. Right now, you've got the dollar trading underneath that swing point going back to January 13th. The dollar trading inside this. Now, while it's inside this channel, folks, the only way for the market to truly push down lower is going to be for King dollar to bust out to the upside of this little correction channel, this downtrend channel that it is in right now, because if it just keeps moving in the direction of this channel, that would be to the low side here. So it looks like, and look at how price is contained in here, especially during the last couple of trading sessions. These candles here, this is just like 1 day's movement when you take a look at several of the candles inside here. Even this morning, coming into that 1 o'clock time frame, you had the dollar pushing down, then pushed all the way back up. Right now, just kind of a spinning top type candle, not a doji, but we'll see where it actually closes out at. But this is the new little channel that you want to be aware of inside the dollar index. Where is it likely that the dollar index will travel to? Well, where it will likely travel to, just like when we were taking a look at the yen, because that was a Gartley pattern. What you'd want to do, folks, is you want to take a look at your A point to your D point. In this case here, the A point happens to be out at the lows on February 29th when King dollar was trading at 78.12. The high made at 83.67 as it pushed up into that June 1st time frame. You just simply take a look at your A point to your D point there, because there was an AB equals CD. There were several of them out there. But just take a look at those 2 points, and the 618 area is at 80.26. Where is it trading at right now? It's trading at that 0.382 area. In fact, let's just clean this up, make it a little bit easier for you to follow along on the home game at TFNN if you're watching us on Tiger TV. So what you can see right now, King dollar, the 0.382 retracement is at 81.57. It wants to get down to the 80.26 level. If it does that, You're going to see some little juice put in the market, so we'll go take a look at the ETFs out there, take a look at anything that you want. You can always give us a call, folks, at 877-927-6648. Let's switch over here and take a spin around the world, see what we have going on here. Now, when we take a look at the world, we're taking a look at the DAX out here. And the DAX showing this uptrend channel that it's been in ever since the lows in September of 2011. And right now what the DAX tried to reach up as high as it could get to get into and test the bottom of that up channel trend line there. And so I expect that what we'll see tomorrow is we'll see the DAX tomorrow, Friday. We'll see the DAX try to get in there, try to get inside that channel. DAX should trade up and do a 1-to-1 A to B equals CD. Should get up into the 64.50 area. He closed out today at 63.92. If we go take a look and see what the FTSE did over in the UK. The FTSE closing at the top of its trading session today. And the FTSE, if we take a look, let's get rid of this little downtrend channel here, and let's go take a look at where the FTSE is likely headed to. Now, we're going to first just look at the most recent downtrend leg between swing points. So what we're talking about is the high from May 1st. The high out there of 58.19, all the way down to the low that was put in on June the 4th. I believe there was a time period there where they were having the party for the Queen. Not talking about the Euro, I'm talking about the real Queen out there. And so the low was put in, I don't recall if the low was put in on the 1st or the 5th. Probably was the 5th when they came back. And what you can see here is just simply taking a look at that last leg down, how the FTSE has crushed through that 0.618 area. That's a 618 retracement. Says it wants to go to the next level. That next level is going to be up in the 5692 range. That's at 0.786. Now, let's also take a look at just simply the larger period. The larger period coming off of the high from March 14th, 2012. That's when you had the FTSE out at the 59.89 level. Again, go all the way down to that June 5th area. I'm going to go ahead and get rid of the first one. Just going to clean this up a little bit here, make it easier for you to see. What you can also see is you've got the FTSE well above the 0.382 level. That means it's in between floors. It wants to head up into that 0.618. That is in the 56.99-ish range. That's where the FTSE is headed to. Oh, how about gold and silver? There was some action out in gold and silver. Let's start with high-ho silver out there. We take a look at silver. Silver traded down. It's got some volume, and it's got a little juice today. You've got 58,000 contracts today. Now, what silver did intraday, it came into the swing point going back to December 29th, 2011. That had 32,000 contracts. What it's doing right now, it's got 58,000 contracts. Its most recent swing point out there, I suppose that you would use would be June 1st, which has 44,000 contracts. So silver has some juice in it today to the downside, folks. Interesting, though, you've got this little trend line. Just simply using the lows of the last several candles out there, that's what stopped silver in its tracks. 877-927-6648. This is the Power Trading Hour. Steve Rhodes filling in for David White. We'll be right back, folks.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Got the Dow off 77 points. And, folks, if you have not received a copy of my free special report, please go over to the homepage of TFNN.com. If you don't do it for yourself, do it for your friends and family. It is a way for you to be able to easily manage your long-term investment, your retirement, your IRAs, especially if you are not in self-directed funds and your only options are to choose, several different mutual funds that might be out there. You absolutely want to have a copy of this report. We are really close to 1,000. I believe we are about 44 away from getting to 1,000. We've had the special report out here for about, I think it's been less than 2 weeks now. I think maybe about 10 days. So please go over to the homepage of TFNN.com and order that free report. You absolutely want it. You want to be, because what it does is it actually simplifies the decisions of whether you should be in or out, and you can apply the same tool to any stock, any mutual fund, anything. So please do yourself a favor, and as long as you're over there, register to win a free ounce of silver. We have that going on through the rest of June out here. So, just a few minutes, and then boom. What you'd get is the opportunity to get and it's a beautiful coin. If you have any Silver Eagles, absolutely beautiful coin. These Great Panther silver coins are right behind there, almost neck and neck. Don't know which one I would rather have. Now, let's switch over here to the ETFs. Let's take a look at the small caps. We're going to take a look at the IWM. And so when we take a look at the volume, so what do we have left here in the trading session? Looks like, looks like we've got about 35 minutes left in the trading session. So We know volume is going to come in during the last 5, 10, maybe 15 minutes. Right now, you've done 47 million shares. Not exactly the sell-off, if it were going to be a sell-off, if the news was just absolutely so bad out there. And you could say that there's bad news out here, and the market is chugging it off. It's got that sledgehammer out there, as we know on the ES Mini. There's other hammers, certainly, but not talking about the hammer candle. Let's just take a look at some volume out there. And so right now, with the ES Mini, it got above the April 10th swing point. That April 10th swing point, as you can take a look at on the chart here, was the largest volume down thrust on the small caps, 101 million shares. And I'm talking largest down thrust ever since the high was made out there March 27th. Now, what the small caps are doing is they are rejecting that price, rejecting that swing point, I should say, both on price and on volume as we speak right now at 3:26 in the afternoon. The low of that swing point, 78.14. If you're a bear, you want to see it close below 78.14. If you are a bull, you want to see that thing close at 78.15 or higher. But it's not going to have the volume to take out that area. For sure. I mean, you're talking 101 million shares, and yeah, you might get a little bit of volume. You will get a little bit of volume in the last 5-10 minutes here. It's got 47 million right now. So it's got a pretty good area of support here right now. What does that say? It does say that the Tiger Gartley, let's see if the IWM, I don't think the IWM has a Tiger Gartley. Let's see, our B point out here has 52 million. So it's not a Tiger Gartley on the IWM. Of course, you're saying, what do you mean, Steve? I'm glad that you asked me that question. So let's go take a look at it. Right now, if we take a look at the A point on the IWM, the A point is going to be the low of June 4th. That low out there, 72.94, 50 million shares. What you really want to be paying attention to is going to be the B point that we have here. That B point that I'm going to use is June 11th. It has 52.7 million shares. Now, yesterday, as the small caps moved higher with 66 million shares. It got above the B point with volume. What does that set up? That's a confirmed A to B equals CD on the small caps on the way up. Where's that going to take you to? It's most likely going to take you to 81.04. What's at 81.04? I'm glad you asked me that. Let's go find out. Let's simply go do a retracement from the highs down to the lows. We do a retracement from the highs down to the low. Well, at 82.15, you got the 786, and at 80.18, you've got the 0.618 area. 80.16 also, or 80.18 also happens to be very, very close. 80.16 happens to be the high of that April 10th area where you have 101 million shares. That is where the IWM wants to head to, folks. And right now, trading out at 78.29. And you got the confirming signal yesterday with a close higher and it taking out the B point with volume. And it had the opportunity to sell off today when the Fed released its minutes. And certainly it did that in the first 10 minutes. And those next 10 and 20 minutes, the bulls, somebody stepped in there. Doesn't really matter who. All you need to do is really pay attention to the charts, watch the candles out there, watch the patterns, watch the volume patterns out there, and it's going to give you all the information that you need to know, because you can listen to that stuff on CNBC, but they're not going to tell you how to trade the markets, folks, because they don't have a clue. Until Tom is out there tomorrow morning at 7:30. He'll tell them how to trade the markets. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to the Power Trading Hour, folks. I'm your guest host, Steve Rhodes, filling in for David White because you've got the power. And we've all got the power to send David some white light and get him back here, get him all nice and healthy out there. And let's go to our first caller. Let's go to Robert in Chicago. Robert, thanks for calling. Thanks for holding.
Steve, thanks for taking my call.
My pleasure. How are you today?
Yeah, I'm great.
Good, good. You wanted to take a look at U-Haul, I believe. Is that correct?
Correct.
UHAL, folks, that is the ticker symbol, and probably almost everybody, that should be a verb or a noun, right? Because when it comes to moving and storage, what do you think of if you're going to do it yourself?
Right.
Yeah. Now tell me what you're doing here and see how I can help you out today.
Well, I was considering going long, but I have a concern I might be too thinly traded for someone like me.
Well, let's see. As far as trading, you got average shares about 47,000 or so, 36, 47, 40, 31. It had a big day here. I don't know what happened on June the 7th. Now, a big day for U-Haul is 182,000 shares. But, there's a reason. Tell me what the thought process is behind going long U-Haul, why you want to trade this one specifically. Tell me what you're looking at there, and then so it's not the most liquid of vehicles out there. How about that? We got the word vehicles in there, and but I mean it's not bad.
Right. I was. There's really nothing I have that I'm looking at specifically.
Okay.
The brand is incredible, and technically, I'm sorry, I don't have anything to answer on that end. But the brand name is good as Dunkin' Donuts, and is the brand name. So I just that's kind of where I'm.
Dunkin' Donuts is probably a better trade, though.
Yeah, I know.
Actually, if you're not partial, I'll just throw up Dunkin' Donuts on the chart here. I think it's DNKN, right?
Sure.
If I were Dunkin' Donuts, that would be the ticker symbol I'd go with. Right. DNKN, Dunkin'. Do you go to Dunkin' Donuts?
I do not. I'm a Starbucks fan.
Oh, you are? Okay. Did you ever go to Dunkin' Donuts? I mean, like as a kid growing up, or is it?
I have, and in Chicago, it's amazing. You drive by a Dunkin' Donuts, and there's lines in the morning.
Is it really
for the drive-through? Yeah.
It's kind of interesting because you figure that. They were kind of maybe they still are. I'm not a coffee drinker. I don't know if you're a Java drinker, but you must be if you go to Starbucks because you're certainly not going there for their bottles of water that they sell.
Right.
but they, I figured Dunkin' Donuts was the king of coffee at one time, weren't they?
And they still are. If you drive by a Dunkin' Donuts in some neighborhoods in the evening time, there's a lot of people who get together there and even into 8, 9, 10 o'clock at night sit around talking and drinking coffee.
Wow, that's cool. That's cool. I don't see that in the stores, down here in the South. But as a kid, I remember I used to deliver the Detroit News and the Detroit Free Press. So I had a paper out in the morning and one before school and one after school. That was in the days when you used to get paid with silver dimes and quarters, though. So that was a good gig. And I had my favorite donuts at Dunkin' Donuts. Now, this is a better looking stock chart. As far as volume, now you're taking a look at 2 million, 1.7 million, 1.4 million. You're also taking a look at a stock. Obviously, you've got the recent IPO, but everybody in the stock, basically, with the exception of a few people today, are at the party having fun. And, the danger on this stock is that where you've got its first level of support, it's really going to be back at the March 30th area, down at the $30.11, and you're trading right now at $36.45. But I would be setting my sights more on something like this than I would U-Haul. Here's a stock where it's behaved the way that you would have hoped that any IPO might have behaved, and obviously you probably know I'm referring to Facebook. Doing just the exact opposite. But it had a B point out here, Robert, on the 11th of May with 1.3 million shares, and when it crossed that area, it did it with 1.3 million shares. And it's just completing a 1 to 1.272, A to B equals CD. So I would let this thing, pull back and look to enter this maybe in the $34 range. A little bit over $34 might be, if it's pulling back on some lighter volume.
Absolutely, that's wonderful. I can let you all go and go down the road of buying Dunkin'. It's just been a phenomenal stock.
Yeah, and if I'll pull U-Haul back up here, and so if we do take a look at it on a monthly chart, it's not that it's necessarily a bad looking stock. I mean, it's just you hit on it. It's very thinly traded compared to other equities that are out there, and so it's not a bad looking chart. But I'd probably push you into Dunkin' Donuts. That way, every time you drive past there and you see those lines out there when you're in that stock, you can honk your horn at them and tell them buy more.
Absolutely. Thanks, Steve. I appreciate it.
Hey, you bet. Thanks for calling and have a great day in Chicago.
Okay, you too.
All righty. So let's see, folks, you got the Dow off 51 points, and let's go back to the ETFs out there. So we were taking a look at the IWM, the small caps. Let's go take a look at the Qs out there. Because when we took a look at the small caps, what I was saying is you had a confirmed A to B equals CD up. That means you passed the B point with volume, with accelerated volume, with some wide price spread. I don't recall if there was really wide price spread, but you certainly did have a confirmed A to B equals CD up. It still is going to be setting up a Gartley sell pattern. It's just not going to be a Tiger Gartley sell pattern because you cross that B point with volume. At the present time right now, you've got the Qs that are in here that have a Tiger Gartley setup. I suspect that the Qs are going to invalidate that one today. Why do I say that? Because right now, the B point on the Qs is 50.9 million shares. What you are at right now is 47 million shares with 20 minutes to go. And knowing how volume comes into these things at the end of the day, it's a decent chance that you're going to be up and over that B point with some volume. Now, you pass the B point on lighter volume. That's what really sets up the Tiger Gartley. But where the Qs want to trade to is really the top of the gap, the top of the downdraft from May 4th. So that's going to be at the price point of 65.83. You're going to want to watch it as it comes into there. What you really want to see is you want to see the Qs reach up over that, meaning get to at least 65.84, close underneath it, and then have the rest of the market set up like this as well to give you additional signals. But that's on the Qs out there. And right now it's a Tiger Gartley. Looks to me like it is in jeopardy today in that you'll have some higher volume in the truest, most purest form out there as of Tiger Gartleys. Now let's go take a look at the SPYs out here. And the SPYs, we're going to take a look at the same B point. SPYs now turning into just a normal Gartley pattern as well. So everything kind of coming into a sync here. The B point is June 11th, 169 million shares. What you've done today, 176 million shares. You did 137 yesterday. The Qs, though, rejecting price, rejecting the swing point from March 6th. The Qs also really kind of in between two swing points out there. They're in between March 6th. They're also in between the April 10th area that has 235 million shares. But you do have volume starting to pick up as you're getting into April 10th. And what that sets up on the SPYs now want to run up to the area of 140.21. That's my call on the SPYs. That's going to take you actually up into the swing point of May Day, May the 1st. So the SPYs are going to get up there. When is it going to happen? Good question. I don't really know. I just know that's where it looks like the SPYs are headed to. Why? Well, folks, it's all because of your hammer, my hammer, the hammer we call the sledgehammer out there. That's what happened as the Fed released its minutes, and as you watch the sell-off during a 30-minute basis, really it was during a 10-minute basis, but certainly during a 30-minute basis, you had the ES Mini push all the way down into a very important area of support. Now, that gets broken out of there. You get it closed below 1338.75, says that the market will want to seek lower prices. But right now, not while you've got the sledgehammer out there. Let's go back and take a look on the ETF side. Well, let's go take a look at the diamond. So let's go see what the Dow is doing for us. Let's see if there's a diamond in the rough out here. And that diamond we're taking a look at happens to be the B point is going to be June 11th, 7.2 million shares. What are you doing today? Well, you're doing 6.7. So you're going to end up with a normal Gartley pattern out here. Looks like you're going to be violating that Tiger Gartley. Really not a big deal, folks. Not a big deal at all. Just simply, you would have preferred to have seen it get up and over and stay over that B point on lighter volume. But today's been a little bit volatile, and even though the market is down 30 points right now, it's the bulls that are actually winning out there. At least that's how I read the charts. And nothing wrong with being wrong. I was absolutely wrong on a trade. Got in a little bit early on the short side and did not stay long once I saw what the charts were telling me, folks. Lose your opinion, not your money. So right now you've got the diamonds also, just as the Qs were doing, testing the March 6th area. That low is 127.18, had 14.4 million shares. Got down to a low today of 127.11. Again, that low out there on the 6 was 127.18. And so the diamonds want to make it all the way up to May Day as well. They want to get up, in my opinion, where they want to get up is into that May 1st area. That would be the 131.40 to 133.14 area, setting up the sell, setting up really a test of a swing point. So the diamonds will not be setting up a Gartley pattern at all. The diamonds are just simply going to be a test of the swing point high out there. You do have a Gartley sell pattern that would be at the 130.37, 130.73 area, but looks to me like the diamonds actually are going to move much higher. If we take a look at some of the spider trusts out there, those are the 9 sectors within inside the S&P 500. What you're going to see, the areas that had the largest moves down have been the areas that have been the defensive plays. We're talking about the utilities. So we take a look at the utilities. Utilities making a wonderful A to B equals CD up. If you're watching us on Tiger TV, you'll see that it completed that pattern yesterday, getting up to a high of 37.27. Now, how does this actually work, folks? The actual A to B equals CD projection, 37.27. Man, oh man. That's why you want to understand your A to B equals CD. Today, now take a look at the XLU, folks. That is the utility sector here. Again, that has been a defensive play, and so this is telling me that, the market is going to move higher. You're not going to have the Fed out there. They've got the grease fire put out because of the election that they had in there. They've got the Spanish olive oil fields all set because they have repiped the banks by giving them some more plumbing, meaning more dólares. And so, we don't have really much in the way to upset the markets other than just normal chatter out there. And today is the first day of summer, so you're going to have people taking time off. You got July 4th here in a couple of weeks, and the markets seem like they're going to want to drift higher. If you take a look at the other sector out there, a defensive play, you'd be looking at the consumer staples area. Let me get rid of this A to B equals CD down here that completed. And what you have here, you've got actually the consumer staples area pulling back on lighter volume, pulling back all the way into, let me just get rid of this too. Just simply the retracement so far to, let's see here. We're going to go from the swing low up to the swing high. That swing low out there being June 4th. The swing high coming in 4-5 trading. Sessions go on June 14th today, pulling back into that 0.382 area, but actually doing it on pretty light volume out there. Let's go take a quick look at the financials and the technology sector. If we take a look at the XLF out here, XLF pushing higher with volume. Right now really probably about it's at 14.51. You closed out yesterday at 14.50. So you did get to a higher high inside the XLF, 80 million shares today versus 64 million shares. The XLF coming back and testing out the swing point from March 6th, rejecting that area. That had 93 million shares being tested today on 80 million shares with 12 minutes left in the trading session. What's that set up? That sets up an A to B equals CD on the financials. That'll take you into the 1497-ish area. That's on the XLF. If we take a look at the XLK, the technology sector out there, let's see what good old technology is doing. Apple, not doing much, down $3, but not down on any kind of volume. Google, down $5. So you can see, technology sector not exactly having any kind of irrational exuberance. What the technology sector did was came back and tested that March 6th area. March 6th high is 2860. 14 million shares today. You get down to 2862. Doesn't actually test it on 8 million shares. 8 million versus 14. The XLK wants to push higher. XLK wants to push into the 2979 area. That would be setting up a 0.786 Gartley sell. Dow down 32 points. S&P's off 4. Composite down 3. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back to the Power Trading Hour, folks. I'm your guest host, Steve Rhodes, filling in for David White. David will absolutely be back with us on Friday, and stay tuned for the Tom O'Brien Show. Also, go ahead and set your clocks right now in advance. Tom will be doing a Beyond CNBC tomorrow at 7:30. I'm sure he'll talk about it. On his show here today, but make sure you set your clocks for that, and make sure you set your clocks for lower prices in the oil market. Right now, you got light sweet crude out at 81.06. It is on its way down to 74.95. Has not exactly busted out the lows, but if you take a look at the lows out here, you're looking at a price point of 81.07. That was on June the 12th. Just simply gathered a little bit of breadth as it had, because it just dropped like a rocket ship from the $106 level all the way down to the 82 and change level, then just simply move sideways a bit, and now oil ready to begin its continued direction lower. 74.95 is the next stop, but some of you have got your bus ticket on oil that is stamped to $65.27. Why? Because that is that is oil's final destination in that move down. At least for the present time. 65.27 is what we'll see on our radar screen in the future. Take a look at gold out here. You got gold trading out right now at 1606 and change. Gold being pushed down and all around and saying, nope, I don't want lower prices. What did gold do? Almost got down to the 0.618 retracement of the last move up. Now, if you really take a look at this, you'll see there's a couple of moves. The last time that gold was actually testing out the September 26th low swing point, the last time that it did that was on May 30th. Gold had traded down to 15.30.40, rejected the September 26th swing point, and then moved up into the time frame of June 6th when it got up to a price point of 16.42. If you take a look at that retracement, gold did a 0.786 retracement. Those are the black lines. We're going to go ahead and get rid of those. Then this next time from down to up, after it does that 0.786 retracement, it does that on June 8th. That low was 15.56. Makes a high 4 trading sessions ago on June the 15th. Gets up to 16.35. Today, it pulls back. The actual 618 is 15.86. It gets down in a little change. It gets down to 15.90 and 50 cents. In my line of work, that is absolutely good enough. It rejects that area. Now it's going to try and get back into that 200-day exponential moving average. Expect it to find some resistance there. It has found resistance the last several times that it has tested that area. That is on the gold contract. If we take a look at what is moving, what is grooving in the marketplace, you've got to the downside. Other than some pro shares and power shares, you got, actually to the downside, you got Priceline. PCLN, they're down 1%. You've got Athena Health, ATHN, they're off 6%. Liquidity Services, the number one IBD stock. Let's take a look at Liquidity Services getting absolutely hammered in the wrong way, the different type of hammering than when we took a look at on that ES Mini 30-minute chart. You had the air come out of the tires today, the kind of air that you don't want to see, 3.3 million shares as it breaks a swing point, as it breaks a beat point, and where this is headed to, folks, is at 52.30 now. It's giving you all the signals that you want to go ahead and get your profits out. Why? Because it's headed to $31, maybe 24 even, but at least the $31. It's not going to do it overnight, but get your money off. Collect your receivables, folks. That's what this trading business is all about. You're going to collect another receivable because you're going to have Tom O'Brien in here in just a few minutes, folks. Have a great one. It's been great to be here with you. Catch me tomorrow morning. I kick things off for TFNN at 9 o'clock. Take care, folks.